Welcome back. Welcome to our second segment. This segment is the trade of the week for the weekend of March 28, 2026. As always, we go to our gap trades. Again, we've had a lot of volatility during the day, and we can see how from Monday's gap, how actually we have closed it within few days. We can see how this gap was closed, this gap was closed with this gap, and then this gap was actually closed also. Now we have our Friday's gap. Now we've had a big sell-off toward the end, and we see how we have respected our, again, our pivot points and our zones. So basically there's been a sell-off, and again, it's a heavy, so this could continue till we hit the next support zone. As far as gold, you see our gold trade. This is based on 60 minutes. Again, that the pressure is to the downside. Once we broke down, we see that on Thursday, what we did, I went aggressive on that day based on the 10 minutes and also because of the daily, which I'll go over it. We had this nice support here. So I did actually, rather than our five contracts, I had the initially I bought the 409 and they all hit. Well, first one hit immediately, and then the rest they hit on Friday. Very nice trades. You can see toward the end of the day, they all it's all worked out. So that was a good trade. And I also later on Thursday, I also bought the 405 calls. Now, that one could have been obviously a lot better. I mean, you're looking at 120%. We could have had maybe 300 or 400% on that trade, 300%. So, yeah, so we hit our targets. Cannot complain. So that was a good trade. ETF of the week, we had well, the rare earth metals ETF was up 10.9%. On the other hand, the crypto income blocks was down 8.9%. The lithium was up 8%, but then the digital transformation DAP was down 8.1%. So let's take a look at gold again, the GLD ETF. If you recall, we've done our extensions, how nicely we did go actually above the 161.8. I mentioned this was a zone that I recommended. It's a good time to sell part of your position. If you recall, we did a video on that. It was end of January. And then you see what happened. The next, we had a bounce right back to that 161.8, got rejected, and we are back to that 100%. So we've had this bounce, but remember, we are below the cloud. We are below the standard line, the trend line, all these extensions. So be careful if you want to go long. I think I will play some short-term trades. And then if we break this support, then every bet is off. So just be aware of that. As far as stock of the week, as always, we look at our Magnificent 7 plus 1 plus MAGS ETF. I've added Micron to this. So Micron timing being part of the S&P 500, S&P 100, it's interesting because now we've had a sell-off in S&P, and obviously it is part of that basket being sold off. So a lot of these Magnificent 7 are part of the basket. So whenever there's a sell-off, they get sold off accordingly. So it's like a kind of a two-edged sword, based on individual, but also part of the basket. But when things are good, the opposite happens. So basically what we see is Apple, it's consolidating with all of these are below their 50 and 20-day moving averages. You see the weakest one is Microsoft and Meta, and this is really heavy in my opinion. Meta is being pulled, and Google, same thing with Magnificent Seven. See how this 20-day has been a major resistance. The same thing we see Tesla. Tesla has been trying to break above the 20-day moving average. No luck. Every single time it has been rejected. So, and we just broke below this low. Nvidia, similar story. We thought we might have some nice consolidation, but we broke below this area of 170, and now we have broken down. And Micron, the similar story after wonderful earnings. So we look at Apple again. It's been more stable this week. Hit the upper edge of the expected meet a few times and broke and just closed pretty flat for the week. We also see that we are really hugging this 61.8% zone, and we'll see if we can hold. But again, we are below the cloud, below the standard line, below the turning line. DMI negative is above positive. So not a lot of confidence at this time. Amazon hit the lower edge of its expected move distribution. We see, okay. And then Meta actually way outside its expected move 2 days in a row. And what we see here, we really broken down below the standard line, below the turning line, below the cloud. The lagging line just broke below the cloud. So these are all heavy, heavy pulling. We need to hold the support right here and right around below about 492, 495. And we see the DMI negative has crossed the positive. As far as NVIDIA, although, it's been broken below that support, we went to the lower edge, but we stayed within the expected move. Tesla also actually went outside and then came back and stayed within its expected move. The other thing about Tesla, again, look at this 21-day moving average and how it has respected that. It's a downward linear regression channel. We were in a squeeze. We see that it was a downward pressure and it fired a wave negative. C wave has turned negative. So not a lot of promises at this time. Um, Now, one thing is we talk about fertilizers and we also talk about crude oil. So one of the fertilizer companies, the CF Industries Holding, and you can see how the squeeze fired, and this is a nice move. We hit the 52 weeks of 137 and we are right there up, and we are hugging our midline. So there's still some strength left with the way that the crude oil and Strait of Hormuz are behaving. Um, I spoke about cocoa being down. Well, one of the companies you can take a look at is Tootsie Roll. Tootsie Roll is in a squeeze. We are above the 21 day. We are right in the midline. Maybe we can squeeze some Tootsies out of this Tootsie Roll. So let's see, the A wave is about to cross. So let's watch this. As far as our scan, speaking of squeezes, we chose S&P 100 based on technical strength. We see Johnson & Johnson, Target, Verizon. We have Nexitra and Caterpillar. So just some ideas for you. We had some earnings last week and 64 prices moved up, 131 down, 55 reported positive, 64 down, 14 positive forward guidance, 15 negative. The big one was Chewy, which missed expectations. And then we have Lithium Argentina, which missed expectations. This week, the big one is Nike. So we want to watch for that. We have Restoration Hardware, but and the Tilray. So again, there are some, if you want to play the volatilities, Nike is expected to report on Tuesday, March 31st, and is expected to beat. So I'll be very much interested in what they have to say. Beyond Meat is expected to miss the estimates. Oh, and one of our favorites, our seasonal favorites on seasoning, McCormick and Company, NKC is expected to beat March 31st. Thank you very much. You have a wonderful weekend and a prosperous week ahead.